There's one stock that is about to skyrocket, in my opinion. They do data centers. They literally build the data centers. And they had $14 billion in revenue last year. So this is the real deal. Their customers are Meta, Amazon, Google, and Microsoft. So it's kind of like an NVIDIA situation where your customers are massive companies. You might not have a lot of them, but you have the right ones. And as more and more data centers get built out, this company is well positioned to build them out. It did just acquire an electrical contracting company, not just anyone, one for $500 million. So a big one, as well as an energy efficiency group as well. So that's something that these FANG, big tech companies really like to get behind, efficiency, and to some extent associate their name with ESG and sustainability. So the ticker is EME. I'll tell you right now, MCore Group. And let's jump into why this data center construction company is poised to break out. And we'll look at the chart as well, not just the fundamentals.
This is Sam Putnam.
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 Now, here's the company. Okay, there's the ticker. And they're out of Connecticut, but they operate across the EU, US. And this is what they do. Okay, everything you need: electrical, mechanical, HVAC, plumbing, lighting, fire protection. They help build data centers as well as solar panels, and they basically do this not just for data centers but also biotech facilities and pharma facilities. So this is a lot of space. They're managing over 1 billion square feet of facility space. 14 billion is no joke. It's only $1 billion of net income. I'm not sure exactly how that works, but I suppose they have massive some type of analyst will have to explain to me exactly how that works, because I feel like if they had a bunch of expenses that would still not hurt the net income. But this is why I'm not valuing them on the price to earnings or anything boomer like that. We're actually looking at the chart and the hot themes, which include data centers. This is a lot of employees, and this is what caught my attention. Okay, so here's the move. Okay, absolutely crazy, 100%. But it's been building out a base since the beginning of August. And what else has been building out a base since the beginning of August? Let's take a look at NVIDIA, right? Same situation. NVIDIA just broke out. EME has not broken out yet. And of course, the SPY has been rocketing up during that time. So this company is very essential to continued success of all these companies, which are also sort of in favorable positions. Microsoft is. Amazon is actually not. Amazon looks like terrible. And Meta looks not great as well. But NVIDIA is the closest analog, I would say, in terms of this move since tariff bottoms and then this digestion sideways. So that's what I'm seeing here. And you have a really good opportunity to risk maybe $10 and look for $10, $20, $30 to the upside. So I would check that out. This is obviously an insane growth story. So how could this get even crazier from, a $5 stock? If we really only look back in the last 5 years, we're talking about a 10x, okay, which might seem like a lot until you look at NVIDIA and look at the past 5 years. And essentially you're looking at, it's about the same actually, depending on where you exactly pick it out. If we're actually looking over here at 2020, which is actually 5 years ago, then yeah, it's like a 30x. So that's the growth story, but we're not really just throwing out numbers here. All we really have to do as medium-term investors is say, this looks beautiful in terms of risk reward, and you can get in here. You can risk maybe this low. So risk $10, like I said, and then look for 20, 30, 40, 50, if not more. Does every one of these huge flags work? No, but there's a lot of them that look great. Snowflake's starting to turn up. Wayfair is starting to maybe turn up. NVIDIA already went, like I said. And yeah, we could look at tiny companies like Lithium America, or even massive companies that are volatile like Intel after this huge investment from NVIDIA. But at this point, you really have to pay attention on a day-by-day basis. And so with EME, you can jump in. Yeah, it'd be great to set a stop. But if you don't check your portfolio for a day or two, well, this thing only moves 3% a day. So you're unlikely to lose more than 3, 4, 5% of your position in a single day, which is obviously reassuring, even though it's not helpful if you're trying to make massive gains very quickly. So you got to balance the two. As far as what else they do serve some big government laboratories, NASA, and they also are helping the major tech companies. Those are the golden gooses. The money's going to trickle down, and it's a lot of money. If they have $14 billion of revenue, that's a lot. I mean, but keep in mind, Meta just gave CoreWeave a $14 billion deal. So if CoreWeave is any indication of the potential for data center buildouts here, EME could even get paid as part of that contract, because CoreWeave does the GPUs. They don't do the facilities management. And no one likes to talk about the less exciting, networking. I just talked about LUMN, another stock that's in the fiber and connectivity services. So you need a stock like that, LUMN for connectivity. You need a stock for the actual facility, the server racks, the housing it all, keeping it at the right temperature, all the boring stuff that this company has become sort of the monopoly for, EME. And then on top of that, then you have NVIDIA, then you have the actual step above NVIDIA, which is the software layer, Microsoft, and then you have the step above Microsoft, which is the user interface layer and the inference, and that's ChatGPT OpenAI, which is not a publicly traded company, but essentially by investing in EME, we are sort of betting on ChatGPT in a roundabout way. So they did buy back $500 million of shares. So, with a tiny company, that can be sort of a false flag, and they say they're going to buy them back, up to some amount, but these guys actually did buy it. So that's a vote of confidence. Apple, for example, does that almost to a fault. So let's take a look at other big companies associated with them. This is the hyperscaler buzzword dream that we're talking about, where all this infrastructure needs to be actually built. All these towns need to, the regulations have to be rolled out. That's the Stargate $500 billion project that the government has sort of agreed to make the permitting easier, which is a huge part. If you thought about like the California high-speed rail, for example, that's been taking years and years, that could still be faltering. Meanwhile, a sort of federal collaboration like Stargate that brings all these big tech companies together could get done quicker, which is crazy to say, but that's just a side effect of these massive companies putting billions of dollars into this space. So they are located in the southeastern US as well, which is where data centers are expected to be built and already exist. So other little companies that help them out, I'm not a contractor. I could probably be somewhat handy, but I don't know the significance of these subcontractors. But obviously EME uses a lot of subcontractors if they're taking $14 billion of contract value per year. Revenue did increase year over year, so that's positive, and they raised guidance as well. So even if we don't dig into exactly the net income versus the revenue versus the EBITDA versus the cost of goods versus I guess there's not cost of goods because they're building things. They're not selling the buildings. They're delivering the buildings. I don't know. We don't have to be like nitpicky about it. All we have to say is this base looks awesome. We can see that technically. And now the question is is there going to be some volume coming into this? Volume is sort of trailed off, which is good. We don't want a lot of volume right before we get in because a lot of volume can indicate selling. I think this might be a misprint. This is an obscene amount of volume where the stock didn't move at all, so we can just kind of ignore that. But besides that, this is kind of what we're looking at. A little bit of volume to come in and then a big push where we get a 3 to 5 day burst. We sell 10%, 10 to 15% up. We hold the rest. Maybe we hold it through a move like this. Maybe you sell out if you need to recycle that cash. And then you get another move up and suddenly half your position is up 20, 30%. So that's kind of the name of the game. And we're not total, chart knuckleheads. We also are saying, we checked in. We know the company's in a hot theme, AI data center infrastructure, literally building the facilities, operations, maintenance. And we know that the sales and revenue guidance is high and actually raised it. So we pretty much got all the ingredients we need. They did just get added to the S&P just a few days ago. So this could be a big deal. We know that definitely boosted Tesla's share price, although Palantir kind of sold off when that inclusion actually got announced. It helped Robinhood. So I'm not really going to look too much into this as a factor because it can be sort of we should be selling into this news, if anything. So we're not going to worry about that. I'm not going to worry about that. Talked about this almost $1 billion, $800 million acquisition of the electrical contractor. And obviously that's exceedingly important for data center connectivity. And these are some other companies to look at. PWR and Fix are two names that are pretty widely discussed. PWR, Quanta makes the servers, AI servers, and then Fix. So we can't buy this because it's kind of, there's just no way to get into this when it's up, 60% from this green line when it first break out. This green line broke out is a moving average of 200 days. So it's kind of just a guideline that even on Robinhood, it comes default with this. So people are looking at this. And PWR, again, it's kind of hard to get position. It's something that's just been grinding up. But the good thing about looking at these two theme tickers is that they're both going up, okay? So it bodes well for our ticker. And this is a base that's just beautiful to get into. Super safe. So that's EME. We're not financial experts, but we know enough to be dangerous in a good way. If you like these ideas, head over to stockscommunity.com. You can try it out for $25 for 7 days. Ask any questions you want. If I'm throwing words at you that are like, I don't know what a moving average is, you can ask about them. If you just want to keep watching the videos, that's cool too. Be careful is all I would say. Because when I'm talking about ideas, I'm talking about selling maybe half your position, like a few days or a week after you buy it. So you gotta not just buy and hold. Not financial advice, but I think these ideas are pretty cream of the crop. If you haven't hit that subscribe button and you like these ideas, hit that, and I will see you in the next one in the library with a library voice.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.